All right, let's dive in. Every single country on the planet, no matter how big or small, is locked in this constant, really complicated struggle. How do you pay for everything? How do you fund the government fairly and, effectively? So today, we're going to try to untangle that universal problem by looking through a really unique lens, the fascinating and, trust me, complex world of taxation in Ethiopia.
But before we jump straight into Ethiopia, let's back up for a second and ask a really fundamental question. What are taxes really for? Is it just about collecting money to keep the lights on? Or is there something deeper going on, a kind of philosophy at play, with a whole set of goals that every government is trying to balance, all at the same time? Okay, so here's our roadmap for this explainer. First, we'll ask, what are taxes for anyway? Then, we'll dive into Ethiopia's unique four-box system. After that, we'll see what happens when the rules get messy. We'll also tackle something called the Great Dividend Debate, and finally, we'll wrap up with the big-picture dilemma that all of this reveals. All right, let's kick things off with part one. What are taxes for? We're talking about the universal goals here. Because, it doesn't matter if you're talking about a huge global superpower or a small developing nation, every government is trying to use its tax system to do a few key things. And it turns out, those goals are pretty much the same everywhere. So, when you really boil it all down, it comes down to three main jobs. First, and this is the one everybody thinks of, is to raise revenue. You gotta pay for stuff, right? Roads, schools, hospitals, all of it. The second big one is to redistribute wealth. This is about trying to create a distribution of income and wealth that a society as a whole considers fair. And the third goal? To regulate the economy. Think about it. Governments use tax breaks to encourage businesses to invest, or they might raise taxes to cool down an overheating economy. The real trick is that every single tax system is trying to juggle all three of these goals at once. Okay, so keeping those three, often competing, goals in mind, how does a country actually build a system to pull it off? Well, this is where theory smacks right into reality. And that brings us to our case study, Ethiopia's four-box system.
So, the system Ethiopia uses is called a scheduler system. Now, I know, that sounds super technical, but the idea behind it is actually pretty simple. Instead of lumping all your income together into one big pile, a scheduler system sorts your money into different boxes based on where it came from. And here's the key part. Each of those boxes gets its own special set of rules and its own tax rates. And in Ethiopia, there are four of these main boxes. You've got Schedule A, which is for your typical wages and salaries from employment. Then there's Schedule B. That's for any money you're making from renting out buildings. Schedule C is where your business profits go. And finally, there's Schedule D, which is sort of a catch-all for other types of income. Things like dividends from stocks, royalties, you name it.
Now you might be asking, why do it this way? Why all the different boxes? Well, the main reason, especially for many developing countries, is to keep things simple. Or at least, that's the theory. The idea is that it's much easier for the tax collectors to manage these separate, neat little categories of income. But, and this is the crucial part, what works on paper doesn't always work in practice. And this brings us right to the heart of the issue. What happens when this theoretically simple system meets the messy reality of the real world? This is theory versus practice.
So let me frame this with a question that's probably familiar to a lot of you. Are you an employee or are you an independent contractor? Now, in Ethiopia's system, the answer to that simple question, well, it changes everything. We're talking about huge financial consequences.
Check this out. It's a tale of two completely different tax treatments. If you're officially an employee, your salary goes into Schedule A. You're paying taxes on a progressive scale, meaning the more you earn, the higher your tax rate gets. But if you're a contractor, your income falls into Schedule C. And in that case, you're often looking at just a simple 2% withholding tax on what you're paid. The difference is huge. The tax burden is just so much lower if you can get classified as a contractor. And you know what? It's not just confusing for regular people. This quote is absolutely stunning. It comes from interviews with actual tax officers in Ethiopia, and it says they have widely divergent views about the very existence and meaning of some income sources. Think about that. Even the people in charge of collecting the tax can't agree on the basic rules. If the refs don't even know what the rules are, how is anyone supposed to play the game correctly? And this kind of confusion doesn't just affect individuals. Oh no, it creates massive conflicts at the corporate level too. Which brings us to another major flashpoint, the Great Dividend Debate, a real battle over company profits.
The whole debate boils down to this one question. A company makes a profit, but it decides not to pay that money out to its shareholders. It just keeps the cash in the bank. So, should that undistributed profit be taxed as if it were a dividend anyway?
Well, for years, this whole issue was basically ignored. Companies would just let their profits build up, and the tax authorities didn't really say anything about it. But then, around 2011, the tax authorities suddenly changed its tune. It launched this really aggressive push to collect back taxes on all those undistributed profits, claiming they should have been taxed as dividends all along. And as you can probably guess, the result was total chaos and controversy for businesses across the country.
And this created a fundamental clash, a real head-to-head conflict. On one side, you had businesses arguing, pretty logically I think, that a dividend only becomes a dividend when it's formally declared and paid out. But on the other side, the tax authority was just seeing years and years of untaxed profits piling up. They saw a huge source of revenue that they were missing out on.
Okay, so let's zoom back out, because these stories, the whole employee versus contractor mess, the fight over dividends, they're not just specific to Ethiopia. They're actually symptoms of a much bigger dilemma, a universal challenge that every tax system on Earth faces.
It's like this constant tug of war. You're always balancing simplicity versus fairness. I mean, that 2% contractor tax was simple, but it creates a massive loophole that many would call unfair. You've got the written law versus real-world practice. What the books say and what actually happens on the ground can be two totally different things. Then there's the government's need for revenue versus the country's need for economic growth. And finally, you have the eternal trade-off between equity, making things perfectly fair, and efficiency, making a system that actually works without being too complicated.
And this all comes back to a really powerful idea, summed up perfectly in this quote from the expert Milka Casanegra de Jonchur: tax administration is tax policy. What she's saying is, it doesn't matter what the law says on paper. The way that law is actually administered and enforced is the policy in the real world. The how is just as important, if not more important, than the what.
So really, the main point here isn't just about Ethiopia. Their experience isn't some unique, isolated thing. Instead, it's this brilliant, real-world illustration of the challenges and the messy compromises that every single country faces when they try to build a tax system.
Which brings us to one last big question. When you think about all those competing goals, simplicity, fairness, raising revenue, efficiency, and how they're always pulling against each other, it really makes you wonder, is a perfectly fair tax system even possible? Or is the messy, complicated, and often frustrating compromise the best that any of us can ever really hope for?